Man Industries was a call where the target has been hit already. It's up 20%. And Oro Pharma is a buy with a stop of 1440, target of 1510.
Okay, let's wrap it up then on that note. Ashwini, thanks so much for joining in as always. And good news for the broader markets at least. They seem to be nudging the green border already. Let's hope the benchmarks as well catch up soon. It's a good buy then from all of us here on the market.
There's only one business channel India watches week after week. For credible and unbiased coverage of markets and business, ET Now, #1 in the metric that matters. Week after week, CNBC TV18 is the #2 channel. India watches ET Now, period. If you think they're excited about T20 cricket, then think again. India's going gaga over ET Now's show, Traders 20. It's where India's top analysts meet on the trading pitch every weekday and give you top 20 stock recommendations of the day on Traders 20. Only on ET Now.
Don't get lured by promises of assured returns before trading. Issued in public interest by MCX Investor Protection Fund.
We are at the cusp of history.
A bull market is a once-in-a-lifetime opportunity.
India is the best emerging market.
You seize it or you lose it.
It is a buying opportunity.
So what are the multi-baggers for this bull run?
Consumer, I think,
Find out from the smartest investors.
there's a roaring bull market.
Buy into the stocks that are on a roll.
Market has given very good returns.
And make your fortune from this multi-year bull run.
The best bull market that India has ever had.
Riding the bull at 2 p.m. on every trading day. Only on ET Now.
At 8 p.m., the talk is all about the markets,
The hits and the misses.
the ups and the downs,
What news is moving the stock?
and what's shaping trade.
Stay one step ahead of the market.
Get street smart on Market Up.
Only on ET Now.
If you think they're excited about T20 cricket, then think again. India's going gaga over ET Now's show, Traders 20. It's where India's top analysts meet on the trading pitch every weekday and give you top 20 stock recommendations of the day on Traders 20. Only on ET Now.
At the heart of every big story, there is politics. And politics in India has taken a decisive turn. A turn that will impact you and your business. Join me, Sagarika Ghosh, as I decipher the changing political landscape in New Delhi. Catch Capital View with me, Sagarika Ghosh, only on ET Now.
Morning and a very warm welcome to Hot Stocks on ET Now. I'm Kamya Verma.
Morning everyone, I'm Avan. The bar's looking a bit sluggish for the frontline indices right now. But let's get you the top stock headlines and start off with the Crompton Greaves as it inks a pact, in fact with Lafarge and for electrical motor supply, to supply electrical motors, and the stock is in the green.
Okay, also watch out for Deepak Fertilizers as Delhi High Court orders government to resume gas supply to the company, and the gas supply which was stopped in May of 2014. But a good bump up is what we are seeing for the stock, 9% higher.
Okay, Vascon Engineers in focus. They've got an EPC order worth close to 286 crore orders from the Uttar Pradesh, and that's clearly working out well. The stock is holding out in the green.
Okay, and watch out for Titagarh Wagons as well, as it gets industrial license for manufacturing defense items. So good going for that counter as well, gaining 6%.
And CMC, it's been pretty sluggish. The profits have come in lower by 37% at 56.3 crore rupees. Revenues too for the company have come in at 672 crore rupees. That's just about flat on a sequential basis, and the stock is reacting.
Okay, let's get in a check on the markets as well. Well, we opened lower and we have stayed lower, though we have come off marginally that day's low that we opened trades with. But right now, down in trade by about 0.6% as we speak. 55 points is what we are losing for the Nifty. Sensex down by about 0.6%. The broader markets, though, have come off the day's low, and smart recovery is what we are seeing as far as the the small cap and the mid cap index is concerned. Just trying hard to nudge the green border there. In terms of sectors, a lot of weakness being seen in metals as well as media space. Auto as well is trending downwards as we speak.
Okay, but let's connect with the management of V-Guard Industries to talk about the commodity cool-off impact. Mithun Pilli, who is the executive director, now joins in on the show. Mithun, great to have you with us. Now, two of the commodities that are part of your raw materials are cooling off at a brisk pace. How much of an impact will the fall in crude and copper have on your company in terms of margin improvement?
As far as crude is concerned, there are basically two, parts where it affects. One is the, plastic crude derivatives, that is plastic cost, which is primarily used for cabinets, etc. And the second is on freight cost. Freight cost for us is actually only 2% of total sales. So, reduction in freight cost on overall, margin improvement will be negligible, maybe 0.1 or 0.2%. As far as that is basically if the diesel prices come down. The second part is on the plastic cost. Basically, a cabinet cost makes up about 8 to 10% of our total cost. We are expecting, maybe 0.5% reduction in cost overall because of reduction in plastics. As far as copper is concerned, one of the major raw materials for our product like wire is copper. But in the case of wire, our pricing is also very dynamic. So, when prices of copper do come down, we tend to pass it on to the market. So we may not see any actual improvement. Whereas for other products also where we use copper for, motors and transformers, etc. In that case, our copper content is roughly 12 to 15% of the total product cost. So there we could see some, I think about 0.5% improvement in gross margin is something that we could see.
Sure. And how much percent of your raw materials cost is due to crude, and how much is it for copper?
So copper would be more. Copper would be at least about 25% of the total consumption would be copper. Like I said, a large part of it, we won't see any improvement in margin because a large part of it is for wires. So in that case, what happens is when the prices do come down, we reduce the prices. And when prices go up, we increase the prices. The pricing is quite dynamic and changes every fortnight. So we do not, I don't think any player usually hold on to the prices when the copper prices make such a huge reduction. So copper is probably the largest commodity that we consume as a company. And crude is less in the sense it's only for freight. And crude derivatives is also less. Plastics make up maybe 8 to 10% of the total cost.
Looking at any price changes right now, given the kind of fall we're seeing in copper?
Yeah, definitely. I think since, April, I think the copper prices had moved up actually. And then since April, there has been, I think especially in June and July, there has been a steady decline in copper prices. And, we have also taken a reduction in prices and passed on most of it to the market. But there may not be any impact because we are also consuming copper which are bought fresh, so which is coming at much lower cost. So the copper purchases we are making today, for example, will be at rate linked to today's LME prices. So some of this reduction in prices is also compensated by reduction in raw material prices.
So are you considering price hikes despite falling material prices to offset weak volumes?
No, we won't be, we are not thinking of any price hikes at the moment. We usually take an annual price hike for all products apart from wire and cables in the month of April. and in the month of October for some winter-based products. So those kind of price hikes, annual price hikes of 1 to 2%, taking care of manufacturing inflation has been done. We have also seen an improvement in our gross margin since April, but the issue is, sales volume growth is muted. So, in the sense, some of these, benefits of lower commodity prices are not coming through fully in the bottom line.
So Mithun, before we let you go, give us a sense as to how FY16 is going to shape up for the company in terms of bottom line as well as top line growth. Leave us with approximate figures.
Yeah, we are hoping that we can grow at the same pace at which we grew last year, which is about 15% growth over last year. But we are expecting most of the growth to happen in the H2, second half, because in the first half of last year we had grown quite well and we actually struggled in the second half. So this year we can see probably a muted growth in the first half and a better growth in the second half. As far as margins are concerned, we are hoping that our EBITDA margins have bottomed out and probably some margin improvement in EBITDA margin is possible this year.
Okay, Mithun, we leave it at that. Thanks very much for taking time out, chatting with us and sharing your business outlook with us on the back of falling crude prices. But a smart uptick is what we've seen in the stock. We got Industries currently up in trade by more than 1%. So good going for that counter. But let's connect with the management of MEP Infra as well, as the company has won collection rights for Gora Toll Plaza. So let's garner more details, chat with the management. Jayant Maiskar, who's the Vice Chairman and MD of the company, now joins us on the show. Morning, good to have you with us on Hot Stocks. To begin with, if you can give us more details about the toll collection rights and by when do you commence tolling operations and what kind of cash inflow are you expecting?
Good morning. Thank you to have me on the show. Basically, MEP just got listed 2 months back in the month of May on the Bombay Stock Exchange and the National Stock Exchange. As far as our business is concerned, MEP predominantly is operating into 3 sectors or 3 particular segments. One is the one-year tolling, second is OMT, and third is the BOT. In BOT, we have a very small asset which we hold, which was acquired in 2010. As far as OMT is concerned, we are operating 5 projects currently across various states of the country. We are predominantly operating into one-year tolling, which are 19 projects which are currently being operated, which are predominantly one-year projects.
So can you just run us through when will we see the cash flows of this win being reflected on your books, and what kind of a profit increase are you expecting from this win?
Basically, the Gurao project, what we are discussing, is a one-year project, which apparently is on the NHAI guidelines of one-year tolling. This particular project will yield the cash flows right from the day one, because it is a one-year project, which is a shorter-term project. Having said that, as far as the long-term projects what we are operating is concerned, we are having 5 OMT projects, as I mentioned earlier, which will start yielding cash from this year, as one of the object clause of the IPO was to retire high-cost debt, which was done as out of the proceeds of the IPO, by virtue of which we will start realizing cash out of those 5 OMTs from this year.
Sure, and Jayant, if you can also tell us, how has the exemption from payment of toll at certain plazas by the Maharashtra government impacted your company since the time the law has come into effect? That is 1 month.
Yes. Basically, MEP is operating apart from Maharashtra in different states, as I mentioned earlier, close to 10 states. As far as government of Maharashtra's policy of exempting cars is concerned, we are currently operating 19 plazas in the state of Maharashtra, 2 for the national highways and 17 for the state government. Out of these 17 projects, 17 plazas, we are operating 3 projects where there has been a change in law as far as the cars are concerned. However, the total impact on the revenue, if you ask me, is less than, I would say, 5%, which is very negligible on the top line. And as far as the cars are concerned, it is very insignificant, as we had earlier already declared it to the exchanges.
Run us through what exactly has been your order flow for the month of June. What are the projects that are lined up over the next 6 months?
Basically, as I mentioned, we apparently operate into 3 segments. One is the one-year tolling, which is a continuous pipeline of projects which NHAI keeps on bidding every year, year after year. The second is the OMT projects. There are a couple of projects which are already announced by NHAI which are likely to be bidded in the next month or two, and post that we expect the order book to grow in that regard. As far as long gestation projects are concerned, NHAI or the Ministry of Road Transport is coming out with two models. One is the hybrid annuity model, which will apparently result into OMT players or toll collecting